Look at that waffle neck. Get out of here. Jeez Louise. You kidding me, Old Navy? Worn this thing like 4 times. Just can't get cream-colored crew neck sweatshirts like you used to, you know? Damn Zoomers.
Hey, TikTok.
Hey.
Really small fish in a big pond. I have a really great idea. I gotta do this
Big
super
truck in a
fast.
small
60
pond.
seconds is so hard. How many of you are so sick and tired of the government's bullshit? How many of you wish we could do something effectively about it? I have an idea. Listen up. Let's defund those assholes.
They've already been
Every
defunded.
single one of us who work, we pay taxes. We pay 3 taxes: federal, Medicare, and Social Security. But what you don't realize and what they don't like to tell you is that you also fill out a W-4. Most people forget about this except for on their day of new hire. On this W-4, we have the chance to go exempt. It's right here. You fill it out in 4C. Do you know what that means? You no longer pay federal income tax. You get to keep all of your money, and we are no longer paying their salary. If we want to do effective change, let's hit them where it hurts. Let's take our own fucking money back.
Oh, jeez.
Stitch this, or ask questions, or comments. If you want more information, let me know.
Well, man, I hope a lot of people didn't go out and do that. So your W-4 sets the amount that you have withheld from your check as an estimate of what you're gonna owe when you file your return. If you put exempt, it doesn't make you exempt when you file your tax return. It just means you're gonna pay a ton of tax when you file your return. That'll show them.
Do you know if you trade or invest in the stock market, whenever you sell your shares to make money, you actually gotta pay anything from a 10% to 30% of your profits?
It's a bush league.
And there's an actual way where you don't gotta pay anything? One of the most known brokers to trade is called Robinhood. Right? That's a broker that actually charges you anything from 10% to 35% for every share that you sell.
I mean, Robinhood does it, the IRS does.
Like AQD, all right? KOT Forex, Hughley. These brokers make sure you don't pay any taxes. Why? Because these brokers are not based in the United States. Therefore, every single dollar that you make is completely just for you and yourself. You don't gotta pay nothing. Enjoy your money.
So Robinhood, for example, if you trade stuff on Robinhood, they're subject to reporting requirements to the IRS that says, hey, Steve just bought and sold all this. If you have a foreign company that you buy and sell stocks through, even if they're not subject to the IRS reporting requirements, I don't know if they are or not, it doesn't make your income not taxable. As it would turn out, any income, whether it's reported to the IRS or not, whether it's legal or not, you're subject to tax on. If you're a hitman and somebody gave you $1 million to go knock somebody off, that person's probably not gonna issue $1 million 1099, but it's still taxable to you. So the fact the IRS doesn't know about it doesn't actually make it non-taxable.
The piece of information that you learned that feels illegal to know.
That if you start an S corporation and you own 100% of your S corporation, that you can buy everything that you own under that S corporation, and then you don't pay taxes on anything that you purchase because it's considered a corporate expense. And you can take one corporate vacation a year, and depending on how much money your corporation makes, that price actually fluctuates up, and you can actually hire your children to work for you for $12,000 a year tax-free. So then you're actually showing an expense, but you're gifting it back to your own family household. And then you pay yourself a salary, which means you pay less self-employment taxes. And then basically at the end of every month, you're left with $0 to pay real taxes on. It feels really shitty to do it,
because it is
but
shitty.
it's kind of how you avoid paying taxes. So I don't know.
That was like a machine gun of bad ideas. Okay, so start an S Corp, step 1. Buy all of your personal things in your S Corp. For something to be deductible, it has to be ordinary and necessary for your business. If you already own it personally, something tells me it's probably not necessary for your business. But even if you did, I got this cool desk. But check this out. My business is gonna buy the desk from me. And in the end, I'm gonna have like no tax. So business buys desk from me for $100. Great, business has a $100 deduction. Bad news is me has to report $100 of income on personal return. So it's a net nothing. What else did she talk about? Putting kids on payroll, that doesn't really work in an S Corp. Bigger issue there is, are your kids actually working? A trip a year is actually like some decent support for annual corporate planning retreat sort of thing. But that's like if you're actually doing work and you have something to show for it. It's not like, hey, remember we did that trip in August? That was our corporate planning retreat. That was a lot.
Feels illegal.
Oh, this format again.
So depending on the structure of your business, if you have an LLC filing as an S Corp, Section 179 of the IRS code, which is currently in effect until 2026, has 100% accelerated depreciation for business expenses, things like computers, equipment, and vehicles. There happens to be a few vehicles that qualify for this as well. Vehicles of a gross weight of 6,000 pounds or more.
Here we go.
Range Rovers,
Oh,
Porsche
yeah.
Cayennes, Suburbans, and Escalades. So in essence, you can go out and buy a brand new $125,000 Range Rover and write the entire thing off in
Now we're
1
talking.
year and reduce your taxable income. Then you can do the same thing year after year, always having a brand new
Every
vehicle
year?
and always reducing your total taxable income to that amount. Kind of feels illegal?
Kinda is illegal. Holy jeez. Okay, yes, you can write off vehicles with a gross vehicle weight rating of 6,000 or more. That's been around for a long time. Don't have to be an S Corp. Still has to be ordinary and necessary for your business. So, if I'm a dentist, do I need an Escalade? What are the sort of dentisty things I would do with that Escalade? Well, commuting isn't treated as business mileage. So it gets pretty hard to build a reasonable case for big SUVs like that. Big trucks, sure, like construction company, that sort of thing makes sense. The highlight for me was buying a new one every single year. And even if that was a thing that would actually save you tax, if your tax rate's 40% and you buy a $125,000 car every single year, saves you 40% of that on tax, that's still a really bad idea. If your tax rate was 100%, sure, but that misses the point. If you're buying a vehicle every single year, the only way you're getting that deduction every year, assuming it's ordinary and necessary, is if you are building an entire fleet of SUVs and you never sell one. Because when you turn around to sell that vehicle that you wrote off 100% of, everything you get back is taxable, even if you trade it in. So, buy a $125,000 Escalade, buy another one in year 2. Well, if you sold that one for 80, you gotta pick up 80 grand in income. As she said, one of those situations where it feels illegal because it probably is.
Every single message, I'm just gonna make a quick video. For you to invest in individual stocks outside of your corporation makes absolutely no sense because what you are doing is you're taking money that you are paying taxes on and then investing it into the stock market, when you as a business owner are able to invest in those same stocks that you're buying personally through your business and not pay taxes on that money on a yearly basis.
Pardon?
So we're talking about if I can save you 20% in tax through your company, and then I get you a 5% rate of return, a very low return on whatever stock that you buy, I've essentially got you a 25% rate of return on that same money that you would have just been investing outside personally. So it might seem a little complicated. If you need help with that, like, feel free to reach out to me because there are better instead of responding to every single message.
I think what he's saying is if you take the money out of your business, then you gotta pay tax on it. But if you leave it in the business and put it into stocks, you never paid tax on it? That's not true, but common misunderstanding. Most types of businesses you pay tax on when you earn income, regardless of if you ever take that money out of the business. And buying stocks, not a deductible thing. You get basis in the stock, but then when you sell it down the road, you apply that basis against the sale price so the whole thing isn't taxable. So confusion on pre-tax, post-tax money. I don't wanna dunk on these people. It is a common misunderstanding. I don't usually get excited about holding investments inside of corporations, but talk with your tax advisor.
Expense. And wealthy people understand art is one of the last unregulated frontiers of taxes. And guess what? It's deductible. Let's say you
Art?
earned $100,000 and you blow it all on a piece of art. Well, your expenses and income make it that you have zero taxes. Here's where it gets fun for you. 2 years later, that same piece of art is worth $1 million. And you decide to donate it to a museum or your own art foundation. Now, assuming you still make $100,000 a year, you just saved yourself $900,000, tax deductible.
Art is regulated. The IRS caught on to the art stuff sometime between the 14 and 1500s. People do use art as a way of laundering money for sure, just like cryptocurrency, because it's not something that flows through a bank, harder to track. But the tax rules around art, pretty cut and dry. You don't get to deduct buying art. Not sure what that was about. Even if your business was like buying and selling art, that would be inventory, it wouldn't be a deduction. And then donating this piece of art. First of all, how much money am I saving by donating $1 million piece of art? Just giving away $1 million. Second of all, there are some rules around tax benefits of donating art, kind of like the tax benefits of donating appreciated stock. But in this case, the charity has to be like an art museum or something like that, which I think he actually said. So yes, you can get off the hook for some gain, but there are other restrictions around how much you can actually deduct each year in non-cash charitable contributions. But I guess some aspects of giving away $1 million of art weren't totally incorrect. My takeaway is, if you're the guy that can find the 10x art, you're not getting your tax advice on TikTok, I can tell you that.
What's a conspiracy theory that you 1,000% believe?
So the modern art industry exists almost entirely to launder money. So think about this for a second. If you hire me to do something shady for you, and then I start to demand payment for that thing, well, you can't really just Venmo me $1 million for like burning down your business or whacking your wife or whatever. But you can buy something from me. But if you buy something like my car, well, the value of my car is set by the market. So if you send me $1 million for my 2001 Mercury Grand Marquis, somebody's going to look at that and find that somewhat suspicious. But the value of art is set somewhat arbitrarily. So I could easily charge you $1 million for a piece of art that I paid $100 to have created. Moreover, if I make a bunch of money in a year and I don't want to pay taxes on that, then I can pay an artist $100 to make me a piece of art. I can value that piece of art at $10 million and then donate that to a museum and then write off that $10 million. Boom.
Now we're talking. Boom, get loopholed. Where to start? If you're gonna send me $1 million for whacking your wife, and that's not okay. If you give me your dumpy old car and then send me $1 million, is that more okay? But let's talk about art, the wild frontier of unregulated tax havens. I'm not sure what bridged the wife whacking to the art. It is true you can donate art, get a deduction for it, gotta be appraised. If you know the artist, it'll make the art for you for $100, but it's actually worth 10 million bucks. Goodness gracious, all these generous people giving away millions of dollars in art. Oh,
so
she's
can
back.
you buy a beach house or a mountain cabin and write the entire thing off, plus it be completely legal?
Yes.
You can. Here's how. So if you own a business and are an S corporation,
Gotta
this
be an
one's
S
for you.
corp.
You can buy a condo
Buy
at
a
the
property
beach,
in an S corp.
mountain in the hills,
Look
or a
out.
ski chalet and use it for business purposes. Not only write the entire mortgage off, but deduct all of your expenses.
Mortgage
Let's
payments.
say you pay
Wow.
the house off in the next 10 years and then you want to claim it for personal use. You can do so without any tax consequence. Just make sure that you use it for business purposes, events, retreats, and also that you allow your employees to use it more days than you use it as an owner. There are, of course, a few rules that you need to follow. However, you can make this 100% tax deductible. And as always, make sure to consult with your state and your tax pro to make sure that your business structure can take advantage of this incredible deduction. It almost seems illegal, but it's not.
Well, at least she said consult with your state and your tax advisor. God bless the tax advisors who are dealing with those people. So buying a property in your business could be legit. Let's say you operate an event center. Okay, it's probably not like a personal residence. Your mortgage payments though, those are never gonna be deductible. Just like any other asset, you don't deduct the loan payments, you deduct the value of the asset itself. She pulled in some like vacation rental rules there, but if you're deducting this thing as business property, talking about how many days a year your employees use it, can a business write off a building? Sure, of course they do all the time. But if it's through the lens of, look at my cool ski chalet, something tells me it's not ordinary and necessary for your business. Oh, he's back.
So once your parents receive this money, you've gotten a tax
Full
deduction
flow
for
chart.
paying it to them, because anytime you're an employer, you actually get to write off salary and compensation to the people that work for you. And then when you're talking to your parents, you say, okay, you're retired, you most likely don't need this money. What I need you to do is to gift me that money back. Now, if it's one parent, they can do
Holy
$15,000.
payroll tax.
If it's both of your parents, they can do about $30,000, and they get to write that off. So that money comes back to you tax-free. Now, once this money gets to you, it came from your business, it's gone to your parents have given it to your own personal bank account, not the business bank account. And then what you do is you take this money and you pay off your student loan.
I would have bought art with it. But okay, so he's employing his parents in his business. The parents are then gifting the money back to him so that he can pay a student loan debt, seemingly making your student loans like deductible in a roundabout way? First off, where are the parents in this situation? They're getting hosed. He gets to deduct his parents' wages, but they gotta pay income on it. So he just shifted his parents' wages worth of income from him over to his parents while simultaneously flushing about 15% down the drain in the form of payroll taxes he wouldn't have otherwise had to pay. Sucks to be that guy's parents. We'll just cruise right past the whole like, are they actually doing work? Frankly, if my parents were down for that, I would just ask for the money. In fact, if you're a parent and your child has student loans, here's a way to save thousands of dollars a year in tax. Stop working for your kid. Don't take W-2 wages. Don't pay tax on those W-2 wages. Just gift them the money. Now you don't have to do any work. Your tax bill went down. I know it's hard to believe. You'd almost think it was illegal. That was fun. Check out Bad Tax Takes over on Twitter. That's where I got all these videos. And here's a link to my reaction playlist.